Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 28th of August and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 45, season 7 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
Busy show again, Curtis, even busier
Yes.
than recent weeks. So we have got our special monthly analysis of the used car value market from CAP HPI in a minute with our special guest, Derren Martin, who's back from his holidays and will be joining us to talk us through the August trends. And we'll also share you the Men Able moment, which is our little snippet there from Stephen Whitton partway through the show. And that's one to stay tuned for.
Yeah, absolutely. And a shout out to all franchise dealers preparing for the September 1st new plate change.
Definitely. So we've got a round of headlines today, haven't we, Curtis?
We have. So headlines today: survey reveals best and worst places to buy a used car in the UK. Lowest levels of car production for any July since 1956. Some NFDA research finds dealer staff recruitment plans bounce back in Q3. Hyundai could dominate EV market by 2025 with the largest electric range of any OEM. Innovation Automotive, a new name, is to launch EV sales with direct-to-customer model. And finally, a possible sighting of James Bond's missing DB5, which was stolen 25 years ago and is now valued at £18 million. So how's that for appreciation?
That's not bad, is it? Well, yeah, see how much it's gone up this year, but I'm sure Derren will tell us a little bit about that in shortly.
Yes, we'll ask him.
Yes.
But before we go any further, we are delighted to welcome back to the podcast Derren Martin, Head of Valuations at CAP HPI, for our monthly update on used car values. Welcome back, Derren. Hope you had a good holiday.
Yeah, thanks, Curtis. Good to be back.
Yeah, welcome, Derren, and glad
Phil.
you're back. We'll ignore the comment about Jeremy taking your place. I think it's a great double act for you. So
he did a good job though, didn't he?
He did a very good job. I'm a bit worried.
He enjoyed it. He enjoyed it in the end. I know he was a little bit anxious initially, but I think actually by the time we've recorded it 8 times, no, we didn't. He did actually enjoy it. So no, thanks for Jeremy, if you are listening today, for jumping in there. But yeah, I mean, welcome back, Derren. Hope you had a fantastic holiday. And I wasn't there on the Lilo next year. But let's get serious for a minute. So let's take a look at the headline figure. You know, we've seen another 3.7% increase at the 3-year 60 point in the values for August going into September. And that's an equivalent of £475 on average. And that's made it the sixth successive month-on-month rise since March. I mean, what's your take on the used car retail activity over the course of the month? And you know, have staycations impacted activity on demand? And how has this fed into the latest rise?
Yeah, hi. So around the end of July and a couple of early days in August, the market, it seemed quite stable, and I didn't think that values were going to go crazy like they've done. But it then seemed to pick up dramatically, and it has really ramped up over the last sort of 2 or 3 weeks, really. And it's ended up in a 3.7% increase. Been going up all the way through the month from those early days, and again, it's pretty much across the board where values have been going up. 1-year-old cars gone up 2.9%, which is nearly £700. And I think with regards to staycations, I think people are obviously, when you go abroad, you maybe get away from it all. You're not you kind of switch off a little bit more. I think with staycations, you don't necessarily. You're either at home or you've gone away in this country and you've still got your iPad with you and you've still got your laptop potentially, and you are thinking about buying cars maybe as a consumer. And I think that demand has stayed stronger in August than in normal August. It's not quite as strong as maybe June, July, but it's still really strong out there, and all the dealers that we speak to are very, very active, making good money. Retail values have gone up, so they're making strong margins of the cars that they're buying, and they're after stock, and that's what's driven up these prices by this degree. And we thought values would go up during August, but not to this extent. They've actually gone up by more in August than they did in July. So it is really sort of unprecedented times. That I don't think we'll see this again. I think what we're seeing at the moment, we've not seen it before, and I doubt we'll see it again.
So we've actually now seen what is an astonishing 20.4% rise in wholesale values in that 6-month period since March. So what impact is that having on advertised prices among dealers? And for example, you mentioned in your editorial that retail prices were rising on a daily basis, which has obviously boosted profitability there.
Yeah, so we get a lot of retail data as well as wholesaler trade data, and there's a real theme that when we're analysing this data, that values have gone up this month by a good few percent, and they didn't do that initially when trade values started to go up in May and June. There were some dealers that weren't putting their retail prices up; they were still basing their retail off trade prices how they'd bought the cars previously, and they then realised that they couldn't replace the vehicles for what they were selling them for retail because prices had gone up by so much. I think there was a 6.7% increase in May for June's values. So it took a while to get going, but retail values have now increased and are sort of tracking along with trade, I guess, so that you can buy a car for trade and you can make a margin. And we've heard of retailers buying from other retailers at full-on money, and by the time the car gets to them, retail values have gone up and they can make a margin again. So it's a bit of a risky thing to do, but because they need stock, they've been out there looking for what's good value and making good money on it. So it's been a really interesting market. It's keeping us all very busy, putting those values up. As I say, something that in the past we've had. I think the most we've ever had is 2 consecutive months of increases, and that has been very, very small amounts. So it's been negligible increases, whereas this time, at 20%, normally you would expect values to maybe drop by 5% during this time, maybe a little bit more over that period of time. So there's a 25 to 30% swing in values there, which is crazy, and thousands of pounds put on cars. It is amazing.
Yeah. And as you say, so you're actually seeing some dealers paying retail prices from online vendors to just generate some stock. Yeah,
and obviously private buying and buying off private individuals is really, really active. Using sort of companies like Motorway to source stock, really, really active there. The dealers, they want the part exchange. They don't just want to sell a vehicle. They need the part exchange as well, so that they can. So they've got another retail vehicle because there is a shortage out there. And obviously with the prices high, it's not just there's a shortage, but there's eye-watering prices and a bit of a concern when you're going to buy a car and it's £1,000 more than you paid for a very similar one the week before.
Yeah.
Yeah, and when we will get towards your thoughts of what that will look like going forward at the end. But I think looking at, obviously we always talk about that sort of 3-year 60,000 mile benchmark, which is 3.7. But obviously you also, as you mentioned there, the 1 year, 5 and 10 year averages, which is obviously what you do also produce. But what's your view on what's been happening with those values since the sort of the March-April reopening period?
The older stuff hasn't been going up by quite as much, which is kind of different to last year. Last year, the older stuff was going up because people were avoiding public transport. There's still a little bit of that going on, but not to the same degree. Younger values going up by nearly £700 in a month is, I mean, they're really hard to get. We've seen a real drop off in volume from rental companies, short cycle volumes. The manufacturers, they're not churning their company car fleets. They're not replacing demos, all of those sorts of things. So you're not seeing those cars in the market, and that's driving those prices up as well. But obviously, the issue with driving up those late plate prices is that you're getting above list, and there are cars that are above list, certainly retail, but we're also now seeing a number of cars that are above list clean. So it's if you're buying a car above new car list price and clean, and then you've got to put a margin on it, but consumers are still buying them. So I think the word has obviously got out in the national press as well, and it's inflationary, and consumers realise that they've got to pay, and obviously they're only actually paying for, if they're selling a car and buying a car, they're only paying for that difference. So if their car's gone up in price, they're quite pleased by that as well. And there's offers coming in from car buying groups for above list as well for some of those. So
yeah,
people pay for them maybe anyway.
And you mentioned, I mean, you've mentioned in the editorial where some prices or some models have increased by over 40%, and you say that about that demand. Is it a case that in certain instances that if somebody needs a car, then they need a car, and they'll pay the price to own that car? And obviously we were talking before the show where some of the new vehicle lead times are now extending out to 12 months in some instances, and people are just not prepared to wait for that long.
Yeah, you'll pay because you want you need to replace your car, or maybe you thought, I should have replaced it last year, so now I'm going to replace it. They probably won't expect values to come crashing down anytime soon. So yeah, they are paying for them. One of the themes we've seen more over the last few weeks than previously, though, is sort of commodity cars, as we call them, going up in price. So those cars that were plentiful in sort of times gone by, where they were very popular fleet cars or rental cars or Motability or something like that. There's a lot of those cars around. Their residual values had been probably held back a little bit and were not as strong as some others because they're so plentiful in the market, and so they looked good value. So there's been a bit of a battle for those almost sort of standard looking cars. They're good cars, but they are in plenty of volume, and they've been going up dramatically in price as well over the last few weeks. Things like the Focus, Peugeot 308 both went up 7%, or over £1,000 at 3 years old in the last in the last few weeks. Seat Leon, Astra, and then MPVs with sort of Alhambra, Zafira. They've all been going up by really strong amounts as well. So sort of £950 on a Zafira, which is 10% of its value in a few weeks. It's those vehicles that have got the room to move upwards because they looked good value before that have been doing really well recently.
Because MPVs, MPVs were struggling, weren't they? The market had sort of died down because people weren't going anywhere, were they? In the early parts of the lockdown, the demand for MPVs, and I know minibuses and things like that had a similar issue, didn't they?
Yeah, definitely. I think MPVs were struggling before the pandemic because they're just not a particularly desirable purchase. SUVs have become the flavour of the month, and obviously values of SUVs were a lot higher, and MPVs suffered a little bit because of that. And probably would have carried on doing that. And then they suffered last year, as you say, social distancing, people not going anywhere. They came down in value between sort of October, November, and sort of March of this year. Though that was the sector that dropped the quickest in percentage terms. So as I say, it's got the manoeuvrability to go up, and that's what's happened. And also, staycations have helped that. So. Those cars are kind of almost fashionable again, really, to go on holiday and take people around in the car, because transport is getting back to where it used to be, and I guess more so in those sort of holiday places. So yeah, it's a real pickup of that. And as I say, they're good value, so it's a good time to buy them.
And Derren, it's interesting to hear what you're saying about the rise of these commodity cars. And following on from that, every month when we have you on, we always ask you about what are the strong performing segments, and you've outlined some of them. But in previous months, you've highlighted sports cars and premium cars under the sort of toys banner. How have they done over the past month?
They've done okay, but the sports sector, for example, has gone up by 1.1%, whereas MPVs have gone up 4.5%.
Yeah.
And lower medium, so C sector, which is that Astra Focus 308 sector, that's gone up 4.6%. So those two, lower medium and MPV, were our biggest movers up. Sports, up 1.1%. Convertibles have gone up 1.3%. They've gone up a lot over the last year. So they've slowed, and it's not necessarily the aspirational stuff that is going up dramatically now. It's the more the more standard vehicles that are going up.
So and finally, because we can talk about the used car market, we may never get all the answers, but the big question is going to be what's next. The Ackley predicted a summer of strength, which looks like that's the case, because I think we've got our last week of hot weather coming, so I think summer's not far over now, and we'll be heading into winter. But what can listeners expect now in terms of values over the sort of the coming weeks and potentially months as we sort of head out through the third quarter and then into the fourth quarter of the year?
I think it was easier to predict a summer of strength than it is to predict what comes next. We kind of saw the shortages that had happened from factories that are closed, and I always said that the initial strength in the market, sort of prior to maybe the end of June, wasn't semiconductor related. It was due to factories not producing as many new cars as they had in the past. It was due to some social distancing. I think the phrase wasn't even known then, but the pingdemic, with people having to take time off because they'd had been track and traced. So up until that point, and then we knew the semiconductor issue was going to hit from sort of July onwards. So it was quite easy to predict, in my head anyway, that we would have strong values over the summer months. So from now, we're speaking to a lot of manufacturers. They're differently affected by supply issues with semiconductors and other components. So it is quite brand specific. But I think September is going to be a real challenge for new cars, which means you're going to get less than normal used cars back in as part exchanges and fleet returns. So you're not going to get those cars in such big numbers appearing at the auctions and other routes to remarket. So I think supply is going to remain constrained. Demand, I think, is going to stay fairly strong. I can't see why demand would drop off, although you have got caveats of the end of furlough, maybe some economic reality hitting, but at the moment all the signs are healthy on that. And you've potentially got people, as you said earlier, Phil, about buying a used car rather than a new one. So we think that values will continue to go up during September. I've always, every month, I think I've said I don't think it'll be as strong as last month, and it was by surprise this month. So I think it will be strong in September again. And even if values dropped, then, I mean, they've gone up by, 20% in a few months. Even if values drop, they're going to be way ahead of where they were. But I get where dealers are sort of having to maybe put a part exchange price to a consumer, and they don't know that when they're going to get that new car through, or they might have an idea, but it's going to be at the end of the year, and they're trying to cater for that. So I think, I mean, we are a guide, but I don't think that values are going to drop away dramatically towards Christmas. I think we've got these supply issues until well into next year, probably into the second half of next year. And I personally think that values will stay relatively high for some time yet. You might get a bit of stabilisation, but I really don't think that values are going to come down anytime soon. But obviously, going above list is generally not sustainable once people realise that that's what's happening. So they will come down at some point, I would say. But I certainly don't see a crash coming.
No, I'd agree with that. I think there's there's no sort of influx of stock on the horizon anytime soon, is there? There's nothing to signify any, sea of product around the corner.
I think when it does come through, it won't all come through in one go anyway, will it? It will come through at various different manufacturers at different times, and it's certainly, there's still plants that are being closed at the moment because of lack of semiconductors, or like having down days and sort of a week off and things like that. So it's certainly not imminent that any big raft of stock is coming through that would affect the used car market to that degree. And it's always led by supply and demand, and the supply just isn't going to be there to cause that crash.
And Derren, I've got a new tagline. It's just come to me. It's the autumn of availability. How's that?
Well, yeah, I thought about calling it the Indian summer of strength.
Oh, that's even more confident than mine. Well, look, Derren, many thanks for joining us today and providing some exclusive insight into the August values and trends. The latest editorial that we've been talking about is available on the CAP HPI website now, so any listeners wishing to take a deeper dive into the month's trends can head over to the caphpi.com website, click on the extras tab and select editorials, and you'll also find the latest LCV values there too. So Derren, many thanks for joining us. Really do appreciate your time.
It's a pleasure. Good to speak to you.
Yeah, thanks, Derren, and look after yourself and stay well. Yeah. Have a fantastic bank holiday weekend too.
Yeah, cheers, and you. Bye.
See you next month.
Yeah, bye.
Cheers.
So back to the headlines then, Curtis. So we've got several headlines, as you indicated at the start of the show there, and fascinating insight there from Derren, as always, and puts a lot of context around some of those headline figures, which is always needed, isn't it? It's too easy just to take a figure without any context. So talking about figures, so we're heading over to motortrader.com, and its survey reveals best and worst places to buy a used car in the UK, and this is perfect for you, Curtis, because you like your top and bottom 10. So this is new research from Moneybarn, who have revealed the worst place to buy a used car in the UK. Now, interestingly, Motor Trader have put that as Cardiff, but we have actually got a copy of the survey which does go into the detail of the best and worst places.
Yeah, so Motor Trader, presumably they got that from the press release, because we can't actually find that in the survey. And I do urge anyone listening to go over to Moneybarn, because it's a pretty comprehensive piece of research that they've done. So what they've done is that they've looked at, on a regional basis, and they've looked at reviews of dealerships around the country, and also looked at listings on Parkers to assess the availability. And they've done some benchmarking around I think it's the Fiesta they chose as their sort of target car, to see the average price of a Fiesta around the country. And from that, they've produced a number of top 20s. So as you say, Cardiff was revealed by Motor Trader to be the worst performing city, but maybe if we look at some of the better performers, so Bolton was revealed to be the best place to buy a used car from, and that was based on a score of 7.5 out of 10, followed by Blackpool in second place with a score of 7.5, also 7.5, and Canterbury in third place with a score of 7.4. And all of the top three achieved over 75% in terms of excellent reviews. And looking solely at prices, and this is where we focus on the Ford Fiesta. Romford was the cheapest place to buy a used car, with an average price of £5,894 for a Fiesta, and the UK's which, as we know, is the UK's most popular car. Newcastle upon Tyne was in second place with an average price of £7,193, and Derby came in third with an average price of £7,397.
There is a significant theme here, Curtis. They're very much northern led here.
Yeah, I know. was wondering how long it took to identify that.
I mean, I have to be careful with the listeners, but I am from Lancashire, even though I do live in Yorkshire now. But we won't go into the red and white rose debate on the podcast. But yeah, we've got Lancashire in first and second place there, and then Greater Manchester in fourth, fifth, and sixth and eighth place. So yeah, very much was very northern here, doesn't it?
Yeah, but in defence to the beautiful south, the best reviewed dealers were in Weston-super-Mare, which is in Somerset, although that was followed by Cannock in Staffordshire.
That's Midlands. We'll let Midlands have that one. Yeah.
and Canterbury and Kent. So it really is, as I said at the beginning, a comprehensive piece of research and lots. I mean, you must love this, Phil, because there's loads of data here. There's loads of percentages.
There is, yes.
Definitely worth them. If you go to the Motor Trader story, there is a link to the Money Barn research. So probably easiest to find it that way.
Definitely do go into it. Like I say, there's a lot of data there to digest and interesting as well, and shows the diversity of pricing and desirability across the UK market. So moving on a little bit, and we're talking about production now, and this is a story in The Guardian, which is obviously talking about the latest SMMT figures around the UK levels of production, and they're talking about the UK levels being the lowest July since 1956. So talking about that sector struggled with worker absence and due to Brexit and COVID, and then obviously the raw material and computer chip shortage has also hit the sector as well. So in the UK they've made 53,400 vehicles in July, and that's a 37% drop when compared to the same month of last year.
Yeah, and I think we need to issue a warning with this story, because I did track this story when it came out towards the beginning of the week, and a lot of the headlines were saying it's the worst figures since 1956. Well, the figures aren't great, but it's the worst July on record since 1956. So it's worth just clarifying that. So UK production over the course of 2021 is actually up by 18% compared with the first 7 months of 2020, when of course a lot of factories were shut because of the COVID lockdowns, but yet at 552,500 units, it's something like 29% below what the same period was in 2019. So we're tracking at 29% below what was the last normal year. And the SMMT actually pointed out in its press release that 26% of the cars made in the UK over the course of July were were electric or hybrid, and that's actually the highest share on record. And it does indicate perhaps that OEMs are maybe concentrating on EV production as they keep an eye on lowering their average annual emission levels. Who knows? But I mean, it is indicative, and we will see that figure rise over the coming months.
Yeah, and I think many commentators are talking about at the end of the day, if there is a shortage of production, raw materials, resource, then it's where the manufacturers, the OEMs, are actually focusing their production. If that is on EV, because at the end of all this, as you alluded to there, Curtis, there is a CAFE target that they still need to achieve, and some of that may be borne out in terms of some of this as they transition towards electrification. So you can see that starting to happen. So one that we'll keep a close eye on.
Yeah, and I've also got some van figures. So it was better news for commercials, because production over the course of July was up 7.5% year on year, and that was actually the fifth month of consecutive growth. But output for the year remains 24% below the 5-year average. And interestingly, exports of commercial vehicles increased by 16.2% over the course of the month, while domestic demand saw a slight decline of 3.4%. But year to date, production increased by 26.5%. But obviously, we're comparing against a weak 2020 there.
And we mentioned in that story there in The Guardian about resource and workers, and heading over to the next story from Motor Trader again. And this is from the NFTA, and this is talking about dealer staff recruitment plans bounce back in the third quarter. So they've done some survey analysis, haven't they, of their members of the NFTA, the National Franchise Dealer Association, who have looked at obviously their investment and activities around recruitment.
Yeah, there's definitely head over to Motor Trader for this one, because there is a graph supporting this. So this is some research done by the NFDA, and they found the percentage of dealers looking to recruit across all business areas is significantly up from Q2 this year. And the story points in particular to 77.5% are seeking to recruit sales executives over the next 3 months, and the same percentage intend to employ technicians, and additionally 67.5% intend to hire service advisors. So some positive news here for the sector as staffing levels get readdressed, reconsidered, and hopefully increased.
Yeah, and Derren Martin just mentioned earlier about obviously this end of furlough that's upon us, and it's positive that actually that more than 2/3 there of the dealer network are looking at recruiting in many of their sectors. So that's positive news in terms of it, as particularly as we head to the end of furlough there.
So you're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. And now we're going to head over to Steve Whitten for the latest Men Able Moments, our regular look at mental health and well-being in the car retailing sector. And this week, Steve addresses the issue of when so-called banter becomes bullying.
Hi there. Yeah, this is another Men Able Moments with me, Steve Whitten. Hope you're well. If I said the word banter to you, what immediately comes to mind? Is it a little bit of a joke? Is it a little jibe? A little comment? Maybe picking somebody up on their accent, or a funny way that they say something, or some of their little quips, little quirks, things that they do, whatever it might be? Or does it go beyond that? What about, for example, an apprentice in the workshop who, for no reason other than it's deemed to be a bit of an initiation, has a broomstick shoved through his overalls and then is balanced on a ramp and then elevated into the air in the workshop? Now, when you hear that, are you tempted to have a little bit of a giggle, a little bit of a chuckle, and think, oh yeah, that's just good fun, that's a laugh, that's a joke? Or do you think, that's bloody outrageous, I wouldn't allow that to happen in my business? Now, I've been in the industry a long time, so I like to think I'm pretty immune to that sort of stuff going on. Fortunately, to that severity, it never happened to me. But the reason I developed a bit of a cheeky, chappy, broad sense of humour across the industry was actually as a bit of a defence mechanism, because I worked out very quickly when I was very young in the industry that if you are able to make people laugh, they tend to like you, side with you, and more importantly, leave you alone. Now, go back to the young apprentice with the broom shoved through his overalls. What about if that goes a step further and he's put in a cardboard box that's filled with water? And then he retaliates, because when all of the technicians are sitting having their lunch, he then turns a power washer on them. And obviously they're not happy about that. So what then happens is that they pin him to the ground, and, well, let's say they give him a little bit of a pummeling. Is that okay? So what about when it goes to the next level and they think that it's okay to, I guess what we would call at school, debag him, and that is take his trousers down in the middle of the workshop. Now, many of you are probably listening to this and absolutely cringing at this point and thinking, oh my God, this is 2021. Is that stuff really still happening? Unfortunately, I've got news. And that is that I heard this week of stories across the industry where somebody who is in that environment has just recorded a podcast with me and actually said that he is very aware that that kind of stuff still goes on. Now, you run your own businesses, you decide whether that's right or not, but you also need to decide what risk that puts your business from both a reputational and financial point of view, should those things get used against you at some point in the future. And what happens from a kind of disciplinary point of view, I suppose. Now, my point is this. At what point does that banter become bullying? And at what point do you step in and declare that it's not okay and that it needs to stop and that the perpetrators will be dealt with, etc., etc.? Now, it goes on a step further than this, and this is really the point. We at Menable are all about creating psychologically safe environments. Now, what I want you to think about in this week's Menable Moments is it psychologically safe for somebody to approach his team, their managers, their colleagues, the people around them, and openly talk about the things that are bothering them, that are affecting them on a day-to-day basis, many of which are probably outside of work and nothing to do with the business at all? But as much as we might say, leave your problems at the door, we all know that that's not realistic and actually doesn't happen. You carry this stuff with you all day. Some people are lucky, they can switch off and just put their head down and focus on what's going on. But what if you're not in a psychologically safe environment? What if the environment does turn into banter, bullying, playing around, having a joke, taking the mickey out of people, doing things like shoving a broomstick up their overalls and elevating them on a ramp? Does that make for a conducive environment that's psychologically safe? So, not making a judgment here, just merely pointing out that I actually was quite shocked, if I'm honest, and surprised to hear that that sort of stuff is still going on across our industry. I'm sure it's not just our industry, but of course at Menable and on this podcast, we're only interested in our sector predominantly. So have a think. As always, if you want to reach out, you want to have a chat, menable.org, you can get hold of us or you can contact me on LinkedIn at Stephen J. Whitten. Have a good week and we'll catch up with you next time.
Yeah, and many thanks to Steve for that. Some interesting and thought-provoking comments there.
Definitely. So we are looking at now, looking at the Hyundai. So we're heading over to AM Online now, and the story is, and again, interesting stats here that AM have displayed there around the EV. And the header is that Hyundai could dominate the EV market by 2025. And interestingly, this is some analysis by Peter Vardy's, isn't it, that they've done on the sector. And you can see there it's a very busy visual, unfortunately, but it is dominated there by some way as well from Hyundai and Kia there, not significantly far behind, but Audi are second there, just ahead of both Toyota and Kia.
Yeah, and you will need your reading glasses to read this particular graph, but it is, as you said, it is interesting. It's quite immediate who the leaders are. And interesting that the research has been done by Peter Vardy. So what Peter Vardy have done is they've looked at reports submitted by 37 manufacturers to identify which extent vehicle manufacturers are increasing EV models and investment. And this is how Hyundai has come out on top, because they will be adding 20 models to its range, totaling, which will make a total of 23 all-electric cars by 2025. And it is notable that Kia are also highly rated within this survey because, of course, same ownership and the same model, well, not the same models, but the same underpinnings in many cases.
Yeah, and there is an interesting stat there about Kia, because it says that we'll produce 11 fully electric models by 2025, but promising to hit a company target of 1 million eco-friendly cars sales by 2026. So again, and Toyota's in there on Orlando that are set to go one step further and release 15 brand new electric vehicles by 2025 as part of a 70 new eco-friendly models by 2025. And that kind of relates to that conversation we had earlier about the production into it and this transition to electrification or alternative fuel vehicles that the manufacturers are doing now. So maybe this is the outcome of that now.
Yeah, and just an interesting aside, that the analysis highlights that both Vauxhall and Volkswagen in particular are currently possibly the most eager for that dominance of the EV market in the short term, but this is looking very much over what happens between now and 2025, because I don't know about you, Phil, but I'm seeing a lot of ads for the Volkswagen ID series on TV.
Just a bit. And sticking with sort of electric vehicles, and many might remember this company. I know you certainly do, Curtis, and this is about Innovation Automotive to launch EV sales with direct-to-consumer model, and this is talking about is that Innovation Automotive IA is to start distributing all-electric Chinese brands DFSK and Skywell in the UK with a direct-to-consumer model. Now, you remember the DFSK. I am not so familiar with it, but Skywell's a new one, isn't it?
Yeah, Skywell is totally new to me. So IA, according to this report, will be ready to launch sales by the end of this year. We'll be starting with a focus on providing electric LCVs, but we'll also add passenger vehicle sales in the future. Now, the business, Innovation Automotive, IA, is led by Paul Brigden, who, listeners will be familiar with him because he's been in the industry for 35 years, 20 years with Mitsubishi Motors UK, most recently as operations director. And in terms of the models that are coming, there's the DFSK EC35, which is a compact panel van, and as I say, that'll be the first one in 2022. But there's quite an interesting backstory to this, because it won't be the first time that DFSK have been on sale in the UK. Now, I'm thinking back to my days on Motor Trader, and I ran a couple of stories back then, because initially I think it was back in 2011, former Mitsubishi boss Jim Tyrrell was running the importation of DFSK in the UK, and I think they had 30 odd dealers at one stage, and then distribution was taken over by Bassadone Automotive, the distributor of SsangYong, with the idea of putting DFSK as a bolt-on onto the SsangYong network, and that was for 2017. So I remember going to the CV show that year and going to the SsangYong stand, and there were quite a few DFSK models. So I did ask the question, well, what are they doing here? And it's because they were just about to bring them in. But I'm not sure what happened in all honesty, but it looks as though what we're talking about is a whole new generation of vehicles. And really, initially, I guess aimed at that sort of last mile delivery operator. So small owner operators, small fleets, that's the sort of target audience for these vehicles.
Yeah, I think that's their target market, isn't it? Saying that the vehicles will be backed by a 5-year warranty, that the EC35 will be followed by the EC31, which is an electric chassis cab van that becomes with a 5-year warranty. So as you say there, Curtis, very much focusing on that last mile sector, that small to medium fleet marketplace, and maybe this is the area of growth for electric LCVs, because that is an area of question at the minute because of obviously range availability on these electric vans because of payloads and requirement for that battery. So again, very much focused on that one. So we'll keep a close eye on that one.
Yeah, definitely.
And talking about values then, sorry Curtis, we're just talking about values, and we should have had Derren back on and get his view on this one, but you picked the story up in Autocar, and this is, as you said earlier when you were running through the headlines, that missing Bond car is found, and this 18 million Aston Martin DB5 has been reportedly found after, was it 25 years after it was reportedly stolen?
Yes, yeah, indeed. So this is the DB5 driven by Sean Connery in Goldfinger and Thunderball, and famously equipped with ejector seats, tyre shredders and machine guns. And I've actually got a model in my office, as indeed I'm sure a lot of listeners will have. But it looks as though it's been found in the Middle East.
I suspect it didn't have many semiconductors in that, did it?
No.
I don't.
That's interesting, isn't it? You don't need a semiconductor to operate an ejector seat.
Possibly, yeah, you may do. But as you say there, the original film car was stolen back in 1997 from a private hangar, as you say there, is it Boca Raton?
Yes.
Airport in Florida. And they're talking about there that it's now worth a staggering 18 million. I wonder how much that's gone up in the last 12 months through the recovery of the marketplace.
Yeah, because at the time the car was originally bought in 1986 for $275,000, so £200,000, which would have seemed a lot then, but £18.2 million now. And interestingly, we're not ones for promoting other podcasts, but the theft was actually detailed in a podcast series called The Most Famous Car in the World, which is presented by Liz Hurley. So a shout out there for Liz Hurley. Hopefully she gives us a shout out as well.
Be nice.
But this was run in the podcast and was picked up by the Telegraph, who broke the story last week.
No, fantastic. So again, we did warn you at the start of this was going to be a jam-packed show there. Listening from Derren, do listen to that bit. If you did miss, if you've jumped in partway through, have a listen to Derren. Gives you context around the valuations of what's been happening in the marketplace there, and do urge you to, if you've not read the editorial, head over to the editorial as well and have a read of that. That's a bit of detail in there. And obviously it's a Men-Able Moments week as well, so we've got that midpoint, a little bit of sort of insight and thought-provoking content there from Steve Whitton. As always, gets you thinking a little bit about what you should and shouldn't be saying now in today's world.
But that's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chatter that matters. Good luck to all our franchise dealer listeners on the start of the new 71 plate sales on Wednesday. We're back next weekend with our take on what's happening in the car retailing sector. Until then, it's goodbye from me.
And it's goodbye from him.